All right, so you want to get smarter about making money in stocks? Well, you sent us excerpts from How to Make Money in Stocks. So,
By William O'Neill.
yeah, by William O'Neill. And to say this guy
Knows his stuff.
knows his stuff is an understatement. I mean, we're talking veteran investor.
Founder of a major investment research firm.
Yeah.
Creator of a successful mutual fund.
Yeah.
And founder of Investors Business Daily.
Yeah, Investors Business Daily newspaper. So,
Quite the resume.
yeah, it's pretty amazing. But he doesn't just talk the talk.
Right.
He
walks it.
he walks it.
Yeah.
He's built a whole career on being successful.
Exactly. And you
Yeah.
can tell that real world experience is woven throughout the book.
Absolutely, yeah. And his goal is to help everyday people like you listening learn how to invest and build a second income. It's not about getting rich quick. It's about a solid, time-tested system.
Yeah, and he really emphasizes that it's not just about what to do, but the why behind it. And he uses lots of real-world examples, case studies,
Yeah.
to illustrate the principles in action.
He's all about showing, not just telling. Okay, so at the core of his approach is something he calls the CANSLIM system. It might sound kind of complex at first, but it's a really insightful way to evaluate stocks.
It is. Think of it like a checklist. Yeah.
Yeah, it's like a checklist to find companies that are like poised for growth, like they're about to
Yeah, that are really set to take off.
take off, yeah. So let's break it down. Starting with C, current quarterly earnings per share. Now here's something I found fascinating. He analyzed the top performing stocks over a 40-year period, and guess what? The vast majority of them had earnings increases of over 70% in the quarter before they took off.
That's amazing.
Yeah, it's incredible.
And what I find fascinating about that is it kind of challenges the conventional wisdom of looking just at a company's overall profitability. He's saying the real driver here is this percentage increase in earnings per share.
It's about like finding those hidden gems before they become mainstream, before everybody knows about them.
Absolutely. It's about identifying companies that are not just profitable, but accelerating that profit generation.
Yeah. All right, next up is A, annual earnings increases. This one's all about consistency.
Yeah.
O'Neill suggests looking for companies that have demonstrated significant earnings growth
Over time.
over several years, yeah. Ideally like 25, 50% or even more.
Yeah, it's looking for those companies that are really on a sustainable growth trajectory.
Yeah, not just like one good quarter. It's like
Yeah.
they're doing well consistently.
A temporary blip, they're consistently performing well.
Yeah. And new products, new management, new highs. Think about the biggest success stories, Apple, Amazon, Google. What do they all have in common? They brought something new.
Right. A new product or a new service.
Yeah, new product, new service, something to like
Disrupt the market.
disrupt everything. And that fueled their growth.
Absolutely. Innovation is a key driver of stock price appreciation. And that's what O'Neill highlights. New products, a dynamic CEO, new markets. This is what creates excitement and attracts investors.
And he gives some compelling examples. Wang Labs revolutionized word processing and had like a 1,350% growth.
Oh, wow.
Crazy, right? Then there's Price Company. They're the pioneers of like the warehouse club concept.
Oh, okay.
And they grew 15 times larger. Amgen, breakthrough biotech drugs, six-fold growth. And then,
Incredible.
yeah, and Cisco Systems, they were like the networking boom. They grew over 2,000%.
Wow.
So it's amazing. And here's where it gets a little counterintuitive. He says stocks near their all-time highs are often the best buys, not the ones that look cheap.
I think that's really interesting. It seems illogical, but a stock hitting new highs is often an indicator of strong demand and positive momentum.
Yeah. It's like people think they've missed out,
Right.
and so they won't buy it. But the ones hitting new highs are riding away.
By success,
Success, yeah.
Strong financial performance.
So don't get FOMO and like chase the stocks that have already peaked.
Right.
Focus on the ones still in the early stages
Exactly. You want to get it
of their growth.
while they're still climbing.
Yeah, all right. Now, moving on to the S in CANSLIM, supply and demand. O'Neill points out that small cap stocks, those with fewer shares outstanding,
Right.
they're way more sensitive to changes in buying and selling than those huge companies.
Right.
And this is great for us as individual investors because we can potentially get in early.
Right. Before those big institutions catch on.
Before the big institution, we're not competing with massive pension funds and stuff.
Correct.
We have the advantage of being flexible and nimble.
Yeah, that's right. You can seize those opportunities that, the bigger players might miss.
Yeah. All right. So L leader or laggard. This is about picking the top performers in a strong industry group. His research suggests that the leading stocks in a group will outperform the rest by a huge E-margin.
It's like betting on the thoroughbred in a horse race. You don't want to pick the one that's trailing behind.
You want to pick the winners.
You want to be invested in those companies that are driving the industry's growth.
Exactly. Don't be fooled by what he calls sympathy moves, where a stock just rises because the overall sector is doing well.
Right, it's just riding the coattail.
Yeah, you want genuine strength, not just the tide lifting all boats.
Absolutely, that's why relative strength is so critical.
Yeah.
You're looking for those stocks that are outperforming the market as a whole.
Right. Don't assume a stock is a leader just because it's in a popular sector.
Your research?
Yeah, be skeptical.
Exactly.
All right. Next is I, institutional sponsorship.
Yeah.
They don't need hundreds of institutions, but he says even a small amount of ownership in the right institutions can be a big plus.
Yeah, it's more about the quality than the quantity.
Yeah, the quality.
You know, you want to look for those funds that have a really solid track record.
Yeah, picking winners and holding on to them.
Absolutely. And then that provides...
Yeah. It's almost like having a built-in group of seasoned investors validating your choices.
It gives you a bit more confidence knowing that those experienced fund managers are also invested in the same company.
But he also cautions against excessive institutional ownership.
Right, you don't want it to be over-owned, you know?
It's like a party that's become too crowded.
Right?
Maybe it's time to...
Move on to something else.
All right, and finally, we get to M, market direction. This is super important because even the best stocks can struggle in a down market.
Absolutely. Understanding that overall market trend is fundamental to success.
Yeah, like knowing if we're in a bull market or a bear market.
You gotta know.
Yeah. He gives tips on how to recognize a market top, for example, heavy volume, without further price increases.
All right, that suggests that demand is drying up.
Yeah.
That's that classic sign of distribution.
Yeah. And he uses like historical examples, the 73, 74 crash, the dot-com bubble.
Yeah, those big market cycles.
Yeah. And it's all about...
Inevitable.
Yeah, it's all about using multiple indicators, not just relying on one thing.
Like a doctor assessing a patient. You don't just look at one vital sign, right?
Give you the whole picture.
Right, you need a comprehensive view.
So that's the CANSLIM system. It's a really powerful framework
Yeah,
for finding those companies that are ready for growth.
absolutely.
Now, he goes into a lot more detail about each of these in the book, but this framework,
Gives you a great starting point.
it's like a roadmap for navigating the stock market.
That's a great analogy.
And remember, knowledge is power.
Absolutely.
The more you understand the system,
The better.
the more confident you'll be.
Right, and that confidence is key for navigating the market.
We've covered the CANSLIM system, but he also has a lot of practical advice about things like choosing a broker and opening an account.
Yeah, the nuts and bolts.
So let's dive into that next. He doesn't just leave you hanging with this CANSLIM system, right? He wants to make sure individual investors, actually have the tools and the know-how to make it all work.
Yeah.
So he has this section called Being Smart from the Start. And he covers the basics, like choosing a brokerage firm, opening an account.
I like that he spends time on those foundational elements. It shows he really cares about setting people up for success, you know, not just the stock picking.
Yeah, the whole picture.
Right.
So he recommends going with a firm that's, reputable.
Right.
And he suggests looking for a firm that's a member of the New York Stock Exchange.
Yeah, makes sense. Especially for new investors, I think that kind of stability and credibility is really important.
Yeah, gives you peace of mind.
Right.
Yeah, knowing you're not going to get ripped off.
Exactly. Avoid those pitfalls.
Yeah. He's a huge fan of IRAs, individual retirement accounts. He calls them a secret weapon for building wealth.
It's not really a secret, but I think a lot of people underestimate the power of tax-deferred growth.
Yeah.
Like they can really supercharge
super boost to your savings.
your savings. That's a great way to put it.
All right, so we've covered the basics of getting started. Now let's dive into how he approaches investing like a pro. This is where his decades of experience really shine.
Right, let's get into it.
Yeah. He talks about the strategies and tactics that seasoned investors use, to maximize those gains, minimize losses.
Yeah, the good stuff.
Yeah. And one of the things he really emphasizes is the importance of cutting your losses quickly.
So important. Don't let those small mistakes turn into big ones.
Yeah, you got to be ruthless.
You do.
And he had this rule, the 7% rule.
Oh, yeah.
And he's adamant about it. If the stock drops 7% below your purchase price, sell it. No questions asked.
Man, that's tough for a lot of people, though, isn't it? Because you buy something, you're hoping it's going to go up, and then it starts going down. You're like, oh, it's got to come back.
You want to believe in it.
You're attached to it, yeah.
But he says, like, that emotional attachment is one of the biggest roadblocks to success in the market.
It's true. Sometimes the best move is just to acknowledge that you made a mistake and move on.
Yeah, cut your losses and find a better opportunity.
Exactly.
All right, now here's an interesting perspective. He believes diversification is overrated.
That's interesting.
Yeah. He thinks it's better to have a few big winners than, like, a bunch of so-so performers.
That kind of goes against the grain of what a lot of financial advisors tell you.
Yeah, but he makes a good point. If you spread your investments too thin,
Right.
you might miss out on the really big opportunity.
You can't fully capitalize on the potential winners.
Exactly.
So it's about concentrating your bets.
Yeah, focusing on those companies that you really believe in.
Right. And of course, diversification is still important, but you don't need to own hundreds of stocks.
Yeah. He also cautions against the dangers of margin buying.
Oh, yeah. That's playing with fire.
Yeah, borrowing money from your broker to buy stocks.
Yeah, it can amplify your gains, but man, it can also
Amplify your loss.
magnify those losses.
Yeah, so be careful with that one.
Not for the faint of heart.
Okay, and he has some advice about options, those contracts that give you the right to buy or sell a stock at a specific price.
Right, but you don't have to.
You don't have to, yeah.
An option.
Yeah, it's an option. But he says they can be really risky, especially for beginners.
Yeah, especially with that time element.
Yeah, the time limit.
If that stock doesn't move in the right direction,
Yeah.
you lose everything.
Yeah, it's a race against the clock.
It is.
All right, let's talk about mutual funds.
Okay.
They pool money from multiple investors
Right.
to invest in a diversified portfolio.
Huh.
And he says they can be a great way to diversify and benefit from professional management. But
You got to choose wisely.
you got to choose wisely.
Yeah.
He says look at the fund's track record, the fees, the turnover rate, and most importantly,
The fund manager's philosophy.
yeah, make sure it aligns with your own.
Sometimes people forget about that.
Yeah, you don't want to be invested in something that you don't really believe in. Now, here's a surprising tip. He says buy more shares of a mutual fund when it's down 25-30% during a bear market.
Whoa, really? That's counterintuitive.
Yeah, it goes against conventional wisdom, but he's thinking long term.
It's like buying stocks on sale.
Exactly. So besides the CAN, SLIM system and all this practical advice, he also talks about the importance of chart analysis.
Oh, interesting.
Yeah, it might seem intimidating, but he says anyone can learn to use charts effectively.
Charts can be really powerful tools.
Yeah, and what I like is he doesn't just rely on chart patterns, he combines them with, like, fundamental analysis.
So he's looking at the company's financials alongside the price movement.
Yeah, it's about seeing the whole picture.
Makes sense.
He uses charts to identify when to buy, when to sell. He talks about earnings growth, relative strength.
It's like reading the market's language.
Yeah, exactly. And he even shows you how to spot those potential market tops and bottoms.
Oh, wow. So you can kind of anticipate.
Yeah, so you can protect your profits and not get caught in a downturn.
That's invaluable.
Yeah. So it's not just about finding those winning stocks. It's about knowing when to hold them, when to fold them.
Absolutely.
That brings us to risk management, which he says is, like, essential for every investor.
Got to manage that risk.
You got to have an exit strategy.
Create a plan.
He recommends setting stop-loss orders.
Yeah, to limit potential losses.
Yeah. And he gives guidance on when to take profits, which can be just as hard as knowing when to buy.
Oh, yeah. It's tempting to just ride that wave.
You get greedy.
You do.
But he's all about discipline.
Keeping a level head.
Just sticking to your plan.
And not letting those emotions take over.
Yeah. And finally, he stresses the importance of always learning and adapting.
The market's always changing.
Yeah, gotta stay ahead of the curve.
Gotta stay informed.
So, we've covered a lot of ground in this deep dive.
We have.
William O'Neill's How to Make Money in Stocks.
A lot of great information.
Yeah, the CAN, SLIM system, choosing a broker, managing risk, the importance of learning, it's all in there.
Yeah.
You know, it's really amazing how much he packs into this book.
Yeah, it's really comprehensive.
But there's one, like, underlying theme I kept coming back to. He believes that anyone can learn how to be successful in the stock market.
I love that. It's not just for the Wall Street elite.
Exactly.
Yeah.
It's not just for those guys in fancy suits, you know? It's for everybody.
Yeah, and he really gives you the tools and the knowledge to, like, actually make informed decisions.
He breaks it all down, like, step by step.
Yeah, and he explains the why.
The why.
It's not just like, do this, do that.
It's not just do this because I said so, yeah.
Exactly.
So for you listening, what's the one thing you can take away from all this and apply to your own investing journey?
That's a good question. I think it really comes down to it's a combination of knowledge and action.
Right.
It's great to read books and listen to podcasts, but you got to actually do something with that information.
Yeah, you got to take action.
Yeah, you got to put it into practice.
And he really hammers home that research, discipline, being willing to learn and adapt.
Yeah.
Those are crucial.
It's about having a plan and sticking to it.
A solid strategy.
Yeah, and refining it over time.
Yeah. It's a journey. It's not like you just arrive,
It's a process.
It's a process. And the more you learn,
The better you become.
yeah, and the more confident you'll be.
Absolutely. And don't be afraid to seek out resources to help you along the way.
Yeah, there's so much out there. Books, websites, advisors.
You don't have to go it alone.
You don't have to do it all yourself, yeah.
Yeah.
It can feel kind of intimidating at first, but if you approach it the right way,
It can be incredibly rewarding.
yeah. It's really about taking control of your own financial future, right?
Absolutely. Building a future you can be proud of.
Well said. So to everyone listening, keep diving deep, keep learning, keep investing in yourself. That's what it's all about.
Couldn't agree more.